Hello. In this video, I'm going to give you a list of source of funds, source of incomes you can use to buy your first home or to buy your first investment property or second. Also, some of these funds can be used towards the down payment or towards the closing costs and sometimes for repairs. With time, I run into people that actually don't buy their first home or their investment property because they don't know where to get that money for the down payment or closing costs. And I'm going to show you multiple funds. Also, different kind of banks that you may not be aware of are available for you to be able to get the ideal loan to buy your house or your investment property. Take a look. Source of capitals and funds and how it works. Now, let's start with the retail banks. Those are the regular banks you see on the shopping center, out on the street. They lend you money from money they borrow and the people who deposit in their checking and savings account. Now, they have their own guidelines and you have to meet their guidelines in order to qualify for the loan. But if you do, that's a great source for funds, obviously, to buy your house. Now, you also have credit unions. Credit unions are great, especially for first-time home buyers. Credit unions love to lend money for your home, for your personal residence. For investment properties, not so much, but for your home, they can have the excellent interest rate and ideal loan for it. The process for qualifications are very similar to regular banks. That almost doesn't change at all. But they're a good source. Also, you have the mortgage company. Mortgage company, they're very common, and the source of funds actually is from a list of banks and lenders that they have. They don't lend you money from their own company. What they do is they gather the information from you and they select the best lender or bank that can actually give you the loan for you. With this, the fees can be a little bit higher because the lender charges their fee for the loan and the mortgage company actually charge also their fee for the loan. However, they can get you a loan where a credit union or a traditional bank may not be able to give you the loan for it. On mortgage bankers, they're similar in many ways to mortgage company, but mortgage bankers, they lend their own money. One of the difference with them also, besides lending their own money instead of another lender or company for the funds, is that you could probably get the final decision for the purchase a little bit faster as well, because they're the one who make the decision on who to lend or not. Commercial banks are also another source of large capital. Investment bank as well. Investment bank, those are different kind of banks, and they normally have stocks, bonds, securities that they have under their control. Then you also have private banks. If you have access to one of these private banks, you can also get funds from them. You also have the savings and loans. Savings and loans are different from regular bank. They borrow the money from the clients and depositors. And they also have loan programs different than regular traditional bank. They're a very good source for creative financing and for different type of loan program. They're a little bit outside of the norms. They may have it for you and they may say yes when other institutions won't be able to give you the funds. You also have what is called like a challenger banks. They are remote, and you can access them by online application and online with your computer. And they are now growing and growing more and more, just like the next one, which is digital banks, the neobanks. Neobanks, they're digital and they don't have physical location. This trend is growing more and more. And if for your savings and money you want to put with them, a lot of them are giving 2, 3, and 4 times more than traditional banks return on your money when you put the money with them, because they have also less expenses. when those banks have a lower operating cost than regular traditional bank with brick and mortar buildings, they're able actually to give more money back to their investors or their client, and they're a really good source also for some of those loans. You have the private loans. Those are loans from other people, family, but you also have from the property seller. The property you're planning to buy, sometimes we can negotiate with the seller to finance the property and the seller to become the bank. That could be a very good win-win situation for everybody, because one, the buyer, you can acquire a property, negotiate the term directly with the seller, and not having to go to a bank to be pre-qualified and pre-approved, which it can take a lot of paperwork and a very long time. But with the owner, he knows the property, he or she knows what kind of property the loan is going to be secure with, okay, because they own it. And they make, normally they sell the property for a little bit higher premium. That is the norm. And also they will make money charging interest on the loan they're going to give you buying their own property. Okay, so from the seller of the property, actually that's another great source. It's good also for investment property. You also have money from public office, from the cities and municipalities. Now, cities and municipalities all over the United States, actually, I've seen they have 1, 2, 3, and multiple different kind of loan programs or grants to help you buy your home or investment property for the down payment or for the closing costs or towards repair, or all of them. You can apply sometimes to all of them, and you may qualify to 1, 2, or 3 of those loans, which you can use at the same time for the same property as well. And it varies from city to city, but those are funds that you may not be aware of. They're available to you right there to acquire your first home. So there you go. Hopefully this was an eye-opening experience for you. Take advantage of it to buy your first property. My name is Christopher Raimundo from Priority Realty Partners, and hope you continue learning and growing your portfolio to have a better and brighter future.